Good evening and welcome to Boom Market Stock Show. This is your host, Rian Hobson, and we will do today the word tapering. I'm sure you guys hear it a lot, and believe me, there will be more of it. And then also, I think definitely the Federal Reserve messed this whole entire thing up, and I think inflation will literally explode. On the other thing, also, we will look at the forward guidance of the Federal Reserve. I will explain the word to you as well about forward guidance. And I think definitely the Federal Reserve is behind the curve. It's also a word that I will explain what I mean by behind the curve. And then my outlook on gold, because gold moved, actually its behavior was quite steady today, and I do have my speculation around surrounding gold. But I think definitely the Federal Reserve messed this thing totally up, and I think inflation is about to explode.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Good evening and welcome back to Bull Market Stock Show. This is your host, Rian Hobson. Please don't forget to subscribe to my YouTube page, and then also please click on a link below and just fund your account, and you will be having your classes absolutely free. So let's continue with the class. Not with the class, with the podcast. Listen, I think definitely the Federal Reserve messed this whole entire thing up. I will just share my screen with you, and I will share something. Gold's moves today was literally the one that I was now going to search. What the hell can be wrong here? This is actually a chart that I pull out at at Trading Economics. This in blue is the Federal Reserve balance sheet, and as you can see how it actually ballooned out of order, and it's still going on. The Federal Reserve is literally printing about 120 billion US dollars per month. Now that is actually to do with the QE. That is one word, it's QE. And then we have now the word that comes up is tapering, which means they need to reduce this balance sheet or unwind this balance sheet. So they basically need to stop the print. Now that they need to do. Now, if I can reverse back to 2014, where the first tapering happened, this was now around 2015, 2014. This was the first tapering. You can see here the curve was flattening. I think this time around they were printing about, I think, 80 billion US dollars per month. But when they start with tapering, this is what happened with the dollar. It moved from this point here until there. So this was known as the taper tantrum that actually happened. Now, this part here is 120 billion, and they still continue with printing 120 billion US dollars per month. And this is basically US dollar that is about to climb up. Now, the main thing is the forward guidance of the Federal Reserve. What will they do? We all know, we all can sense, or I can say the market is sensing that the Federal Reserve will start to taper. That is what we basically know. The thing is, the forward guidance is the timing or duration. When will they start now to actually to reduce this stimulus? And also for how long? Will it take about 8 months? Will it take about 12 months? But what I think the Federal Reserve have to move much quicker. I think the Federal Reserve needs to move with actually in a space of a few months, and also lift up the interest rates. If that is the case, then we will see actually the dollar move way faster what the market is expecting. The reasoning being, as I explained the last time, inflation is a bit of a problem. Not a bit, it is actually a headache for the United States. The first part is the food shortages, not the food shortages, but basically the wheat prices that is actually going up because of the drought that happened in the United States. Not just that, there's other food supplies that will also run into shortages, and with it they need to ship it in. Now there's also a problem with the shipping, because with shipping there is heavy constraints on the shipping part, so that brings also delays in the food, and that is also inflation. On the other thing, petrol prices is dropping, that is fine, but the main thing is the shipping cost and also the drought that's in the United States. And then you have the rental story that I did explain the last time. The rental is also a problem, and rent is about 1/3 of the CPI basket, and that is increasing because the millennials can't buy houses because the house prices is too high. So all of those things are adding into inflation, and that's why the Federal Reserve is talking about tapering. The thing is now, what we need to look out for next week, and I think the market will move towards next week with a strong dollar, because they need now to say, listen here, they need to stop with the tapering. And I think they will also start to lift up the interest rates. On the other thing is, the US is totally behind the curve. What they mean by that, by behind the curve, is actually that the US is supposed to lift the interest rates long ago. They were supposed to lift the interest rates, I think in May already. I would say June or May. They were supposed to lift up the interest rates. They are behind the curve, so they need to play catch up. Because if this inflation number of August, I think inflation, the next month's inflation number that will come out, that number will literally be a shock of a number, and that is where they will need to start to push with the interest rates quite more aggressively. Now, the big question is the gold story. Now, this is gold, and it was hovering around the whole time, the 80 mark. I see it's coming down. It's one or two things, is or gold will go up or gold will go down. So we need to be sure on this one. I know there's a lot of gold bucks that love to trade gold, but I think personally, if the Federal Reserve in their forward guidance, that is now with how much they're going to start to taper, and will they maybe lift up the interest rates, then we will see basically the gold will go down. But if they just start to taper and they say, no, the tapering will take about 12 months, and I think gold will definitely go up. There's also the other scenario. If inflation is moving totally out of control, not totally out of control, if, for example, if we see about a 6-7% inflation, which is highly possible, then I think people will start to run with gold as well. But for now, we're looking at about maybe just below 6% inflation, and that will actually send a signal that the Federal Reserve needs to move faster. But the main thing is that I expect the dollar actually to be actually a bit more aggressive. If you look at the dollar, honestly, if the dollar actually for this day of today, it's moving towards, it's over 93. If the dollar parks here today or the next for tomorrow, if it's, for example, it's sorry, I just need to share my screen. I'm talking to myself here. I'm just going to make this slightly bigger. If the dollar is actually sitting, obviously it's opening for a new day and it's above that, I think the dollar will go further on. That has all to do with that policy statement or the language that they changed yesterday. I think there's still a lot of steam that goes with the United States dollar. The other part was the commodities, not just gold, but the oil. The oil is actually getting a hammer. Crude oil is at nearly to Brent is nearly 2% down. Oil is getting a bit of a hammer, and it's actually sitting at around close to that 200-day moving average. I think it will maybe sit still there, but with dollar strength, I think we can see actually that it actually can go further down. That is now if the dollar goes up. The other surprise to me was the indexes. This is actually a big question here. Will the tech shares actually drop? Now, these ones are actually very stable, and they are sitting dead still. I can say on the NASDAQ side or the US tech, because of the bond yields that are dropping, I think the US tech is actually a bit safe. Maybe it will drop, but not as hard as the Dow Jones. I think they will not drop, not at the same rate as the Dow Jones. I think maybe it will drop, but definitely if it needs to drop, I doubt it will drop at the same level as the Dow Jones. You must remember also that the stimulus checks are gone. So that money is out of the system. And we have inflation now. And those people, the money is gone. The wages that they got, it is below inflation. The wage rate that the US economy is going is below inflation. So they're working basically at a loss. Stimulus checks is gone also. So basically, if they lift up the interest rates, it will be very painful on a lot of people in the United States. So, and that will basically lead to deflation afterwards if they hammer the interest rates quite aggressively. I don't think the Federal Reserve had much of a choice but to lift up the interest rates with aggression. There's no choice on that. Lastly is the story. It is the forward guidance. That will be the big thing on Jackson Hole, which will be on the 26th and until the 28th of August. I will not be surprised if we see Monday open with a heavy one, those weird one days where you just see large drops actually in the market. I will not be surprised if we see that start on Monday because of the US, because of the anticipation that they will start to taper a bit faster, and also looking at lifting interest rates. You must remember, there was a few, those of you who read the FOMC's minutes yesterday, there was a few members that did say that they need to lift up the interest rates as well, but not just actually take away or start with tapering. They need to taper and they need to lift up the interest rates. Well, I'm not sure will that sit with all the other members of the Federal Reserve, but I think definitely they will start to taper and they need to do it very quickly. Honestly, I will not be surprised if the next inflation come at about 6% or maybe a bit higher because of the rental prices, the food, and also the shipping constraints or supply strains. That is basically the problem in the United States. So for tomorrow, I think maybe, I'm just not sure. I think if the dollar index is opening a good on that range of the 93 mark of where it is, if the candle is above the previous day candle, then I think, okay, we will see some more dollar strength. But for now, I think maybe the dollar will maybe blow off some steam. And I think Monday it will just continue with the anticipation of Jackson Hole. So that is it from my side. So please be careful and please do check up on that Federal Reserve members, what they are saying, because they will actually move this market quite a lot. So that is it for tonight. I hope you guys enjoyed today's show, and then I will see you guys tomorrow at 1 o'clock. Bye-bye.